Hey Puppy Trades, I wanted to do a video analysis update of the stock market. We'll talk about big tech like Apple and the Nasdaq, as well as Nvidia and advanced market devices. We'll talk about the Dow Jones and the S&P 500. We'll talk about financials like XLF, KBE, and Berkshire Hathaway. We'll talk about Disney and XLI, the industrial ETF. We'll talk about Boeing, and we'll talk about Facebook, Pinterest, and Twitter. We'll talk about Roku, Netflix, Amazon, Palantir, Unity Software, Nano Dimension, Datadog, Fastly, Alibaba, and Wayfair. We'll talk about some clean energy stocks like ICLN, Tesla, Neo, Xpeng, First Solar, Enphase Energy, Acrimoto. We'll also talk about some value stocks like Pfizer, Procter & Gamble, and Walmart. We'll finish it up with crypto, Bitcoin, and Ethereum, and Litecoin. So let's get right into it. Here's Apple on this quad witching date, September 21st. We have a 1, 2, 3, 4, 5 large degree wave 1. We have an ABC correction we put in wave 2, right around the 61.8% retracement of a 5 waves impulse. Very likely that's a wave 2 low that we put in. Okay, on the smaller degree, we have another wave 1 and an ABC correction put in another wave 2. We noticed advanced market devices in Apple. They were all over the bar chart, straddle and strangle screener. We noticed that Microsoft and Amazon had 0% implied volatility ranking percentile. The options market was telling us a large move was going to come, and the wave theory told us that move was most likely going to be to the upside. So he said Apple would go to the 161.8% extension of wave 1 for wave 3, have a shallow wave 4 pullback, and go on a wave 5 higher. The length of wave 1 placed at the wave 4 low, which we expected would end between the 23.6 and the 38.2% retracement of wave 3, would take Apple to around 162. So all of that has happened. Apple went to the textbook wave 3 target of 149, had a shallow wave 4 pullback, and then broke this wave 3 high. So if Apple continues to hold above 141.67, then wave 4 is in right now. The length of wave 1 placed at the wave 4 low will take Apple to 162. So what's the worst case scenario for tech bulls in the short term? Okay, what if Apple breaks below 141? Do we call for a major crash? Okay, do we start shorting the market? Do we load up the puts? In my opinion, absolutely not. Okay, what if, hypothetically, Apple did break below 141? Well, really, we'd just be where we were a couple of weeks ago, saying that that is a wave 3 that ended. We're looking for a wave 4 to end that won't break this wave 1 high, and we're looking to buy and ride a wave 5 higher. So bears have a lot to prove right now when you just look at the Apple chart. Okay, even if they break below 141, they still have not come close to invalidating the idea that we're completing a wave 3 and looking to buy a wave 4 to ride a wave 5 higher. Okay, what's the evidence in the short term that Apple won't break below 141? That comes from advanced market devices, it comes from Nvidia, and it comes from Facebook. But the point is, even if Apple does break below 141, bears have a lot to prove. They still need to get Apple below this wave 1 high and invalidate the idea that we're not ending a wave 4 to buy and ride a wave 5 higher. I don't believe Apple will break below 141, but I do want to use Apple and the Nasdaq to give the worst case scenario for tech bulls in the short term. So the Nasdaq and Apple are very similar. It's a wave 1 and a wave 2, a large wave 3 impulse, and then a wave 4 that ends at the 23.6% retracement of wave 3. So for the Nasdaq, there's a couple of ways to count it. My preferred way is that this is a wave 1. This is all a wave 1 from the beginning of March to the high that we formed at the end of April. That 2-month rally is wave 1. This is wave 2, and we have a huge wave 3 impulse that ends at the 161.8% extension. We have a shallow wave 4 correction, and we're looking for a wave 5 to ride higher. Okay, so the length of wave 1 in black placed at the wave 4 low will take the Nasdaq QQQ all the way to 397. Now, I want to use a more conservative target because there could be another way to count the Nasdaq that would give a shallower wave 5 target, and that's that this is a 1-2-1-2 Elliott wave nest. So we're still ending waves 3 and 4, but in this view, the length of wave 1 that's going to be used as the measuring stick for wave 5 is shorter. So that's what this orange line is for, is to show that even in an alternate, less aggressive view of this wave 5 in the short term, the length of wave 1 in orange, not black, placed at this wave 4 low will give Apple a wave 5 target of around 387. I don't believe that the Nasdaq will break below 352. But what if it does? What if the Nasdaq does break below 352? Okay, should we call for the market to crash? Should we start, loading up the puts? Right? Should we see what the people, who never thought the market would get this high are saying? Okay, I don't think so. Even even if the Nasdaq did break below 352, the bears would have a lot of work to do still. It would just be where we were a couple of weeks ago, where we're saying wave 3 ended. We're looking to buy and ride a wave 4 higher. The length of wave 1 placed at the wave 4 low would then take the Nasdaq to around 397. Okay, so it's the same idea. It's the same destination. Even if we break below 352, it's not the end of the world, but I don't believe the Nasdaq will break below 352. I don't believe Apple will break below 141. And we have a lot of evidence from that in these semiconductor stocks. If we look at Nvidia, this is a pretty clear view of the market right now that this is a wave 1 and a wave 2. This is a undebatable wave 3 impulse, and we have an ABC correction we put in wave 4 at exactly the 38.2% retracement. So we expected a reaction from that level. We predicted most of this entire rally, but it blew past our targets, and then we had a wave 4 that ended at exactly the 38.2% retracement. So at the very minimum, there's no way that a wave 5 can be counted where we don't break this wave 3 high of 208. That means at the very minimum, we should see Nvidia go about 25 points higher at the least. Okay, it's very unlikely in the short term the market will be crashing during that time. Okay, so this is wave 1 and this is wave 2. We have a huge wave 3 and a wave 4 impulse. So it's just like the Nasdaq, depending on how you count wave 1 is going to be the length of wave 5. So the length of wave 1 in red, placed at this wave 4 low, gives a wave 5 target of 218. The larger wave 1 target is going to be this black line from the beginning of March to the middle of April, and the length of wave 1 in black, placed at the wave 4 low, will take Nvidia on a wave 5 higher to around 224. So 218 to 224, that's the wave 5 target. I don't believe that Nvidia will break below 178. I believe we're within wave 5 right now. The wave 5 minimum target is around 218 to 224. There's no way to count a wave 5 where we don't break below 208. That means there's really no way to count Nvidia where we're not going higher in the short term. It's very unlikely the market will be crashing during that time. Advanced market devices, this is a smoking gun right now. If you're a bear in this market, you have to look at the AMD chart. There's a couple of things to look at. In the short term, most likely, this is a 1 and a 2. And this is another wave 1 and another wave 2. And the more aggressive view, we'll begin a wave 3 of wave 3. And that's going to be huge when we look at the larger degree count. But what's the more conservative count? The more conservative count of AMD is something like this, where that's a wave 1 and a wave 2. This is a wave 3 that ends at this high. We're putting in wave 4 right now. So if we end wave 4, then the length of wave 1 placed at the wave 4 low will take AMD into that 125 range pretty shortly for this wave 5 target. But I don't think there's a way to count AMD where this isn't a 5 waves impulse from this low. So I don't think there's a way to count AMD where we're not having an extremely important low put in on May 13th. And in the more conservative view of advanced market devices, this is 1, 2, 3, 4. We're going to go on a wave 5 higher to around 125 to 126. It's very unlikely, while AMD and Nvidia are going 20, 25 points higher, that we're going to see the market crash during that time. Now, does that mean AMD is a great setup and someone should just, ape into out of the money calls? Well, if you look at AMD's implied volatility ranking percentile, the IV percentile and the IV rank are around 35%. Okay, so generally, if I'm buying options, I want to see these numbers as close to 0 as possible. Otherwise, the option seller has a pretty big advantage over me. Okay, but AMD is a nice piece of evidence in the short term that we've got more upside. At the very minimum, this is 1, 2, 3, and 4. The length of wave 1 placed at the wave 4 low will take AMD to around 126. Now, on the larger degree, this is a very interesting view, okay, because this is a wave 1 and a wave 2. This is a huge wave 3 and an ABC correction that put in wave 4 at the 38.2% retracement. So we came into this quarter with the idea that Apple and advanced market devices were going to be two huge outperformers because they were all over the bar chart, straddle and strangle screener, and we were seeing, these large opportunities develop from a wave theory perspective as the quarter was ending. So we were having this debate just a couple of months ago, just a couple of weeks ago. Were large institutions accumulating advanced market devices, or were they distributing advanced market devices? And we have answered that question. We have impulsively broken this wave 3 high. We've given a ton of evidence that this May 10th low will not be broken. Okay, so one target was the length of wave 1 placed at the wave 4 low. For a wave 5, that's already been reached. Okay, what we said was the more aggressive target that isn't so aggressive anymore is that the length of wave 3 placed at the wave 4 low will take AMD on a wave 5 to around 136. I think that's looking pretty good, and there's a potential, even if we just look at the smaller degree count, we could be going to 136 just within this cycle from this May low. But the important thing is there's not really a way to count AMD where in the short term, we're not breaking above this 122 high. And that means the market will probably not be crashing during that time that AMD and Nvidia are having, 20, 25% rallies. So that's AMD. I want to talk about the Dow Jones ETF, DIA, some of these industrials. This is a very important chart for the market bulls. I believe this is a 1, 2, 3, 4, 5 large degree wave 1. An ABC correction puts in a large degree wave 2. So the length of wave 1 placed at this wave 2 that we put in October has given a minimum wave 3 target of 372. This is also a classical trading bull flag, right? So we're all doing wave theory. Some of us are just using labels, but the length of this rally placed at this low has always been taking DIA to 372. I think it's very interesting. When you zoom into DIA on the short term, we have another 372 pop up. So from this low, from October 30th, we form a wave 1 and a wave 2, a wave 3, and an ABC correction put in wave 4 right around that low of 332. Notice how this low is a quad witching date. Okay, that's not an accident. Expect volatility around quad witching dates. Typically, it's a rotation from one sector into another. Okay, so if we look, just a couple weeks ago, we were having the debate. Are large institutions accumulating the Dow Jones ETF DIA, or are they distributing it? Okay, and we've held this wave 4 low. We've broken this wave 3 high. We've confirmed on the larger degree, we're within a wave 1, 2, 3, 4, 5 higher. So we're within wave 5 higher on the larger degree. On the smaller degree, we formed a wave 1 and a wave 2. So the textbook wave 3 target is the 161.8% extension of wave 1, which is 361. We had a shallow wave. We're expecting from 361, we'd have a very shallow wave 4 correction before wave 5 higher. That's at least the length of wave 1 placed at the wave 4 low. That would take DIA to 372. So DIA is a really important chart. First, this 5/10, this May 10th date for a high is going to pop up in the next couple of charts that we look at, particularly the S&P 500. Okay, 2, it's giving us very important levels to the downside. So I think 337 for DIA to the downside is where general market bulls, they're going to say, oh crap. Okay, 332 to the downside, this wave 4 low, this is where general market bulls are going to say, oh, SHIT. Okay, until we're below those levels, bulls are still in control. In this wave 5 setup, that ultimately takes the Dow Jones ETF DIA to 372 is all over the market. We'll look at the S&P 500 right now to pay it lip service, but this is not a very useful chart for bulls. But let's just look at the S&P 500 right now. It's very similar to the Dow Jones ETF DIA. This is a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction putting in a large degree wave 2. The length of wave 1 placed at the wave 2 low takes the S&P 500 to 461. Since the election, since November 1st, since October 30th, since Halloween, we have had 460 as our target for the S&P 500. So you can either start listening to the people who expected that the S&P 500 would get close to 460, or you can listen to the people who said that the S&P 500 would never, ever, ever, go above 360. Right? And it would never, ever go above 391. It would never, ever, ever go above 420. Okay? You can listen to those people. You can listen to the people who got you there. Okay? I don't really care. Okay? But if we look at the S&P 500, this is a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction, large degree wave 2. The length of wave 1 placed at the wave 2 low has given us, since the election, our target of 460. Okay? So from that low, it could get very similar to the Dow Jones ETF DIA. Let's talk about the more accurate count. What's the more textbook wave theory count? The most textbook wave theory count for the S&P 500 is that this is a very aggressive view, but I think it's probably the more accurate view. This is the wave 1 and this is the wave 2. This is a wave 3 that we put in late July. So this is wave 1, this is wave 2. This is a wave 3 that we put in the middle of July. We put in wave 4 in late July. So under this view, we don't want to see 421 broken for the S&P 500. Okay, so we never want to see 421 broken for SPY, no matter how you count it. Okay, we don't want to see 421 broken. Okay, in this probably more accurate but very aggressive view, the length of wave 1 placed at this wave 4 low will take the S&P 500 to 488. Okay, I don't need to have 488 as my target. I'm not interested in having 488 as my target. In fact, I want to take the more conservative view that says, just like the Dow Jones ETF DIA, wave 3 for SPY ended on May 10th. When we look at, a lot of these ETFs, we're going to see across this whole value banks and tanks side of the market, there's a very important high that's put in on May 10th. And I think for the S&P 500, the best way is the more conservative view that says, just like the Dow Jones ETF DIA, we put in a wave 3 high on May 10th. In that case, we've completed wave 4 and we're within a larger degree wave 5. We've completed wave 1 of wave 5 and we put in wave 2 of wave 5 in late July. Okay, so there's no scenario where bulls don't want to see a SPY break below 421. This is the more conservative view. Okay, this is why I'm presenting this view for two reasons. The first, it lines up perfectly with the Dow Jones ETF DIA that says on May 10th, we put in a wave 3 high. We've completed a wave 4 low, so we're within a larger degree wave 5. We've completed wave 1 and wave 2 of wave 5, so we're within wave 3 of wave 5 right now. For the S&P 500, if we say that wave 3 ended on May 10th, then that's the exact same idea. We've completed wave 4, we're within a larger degree wave 5. This is wave 1 of wave 5, and that's wave 2 of wave 5. So the more conservative way to view the S&P 500 is that the length of wave 1 placed at this wave 4 low that's put in late to mid-May is going to give a wave 5 target of 469 that lines up with the Dow Jones ETF DIA going to around 372. Now, what's important about the S&P 500 is that even in the most conservative view, the length of wave 1 placed at the wave 4 low will take the S&P 500 to around 469. Okay, why is that important? Because that will take us past our destination and our target since we've had since the election. That this is the wave 1, the length of wave 1 placed at the wave 2 low will take SPY to around 461. So how useful is this? If SPY is above $20 to the downside, it'll go $20 to the upside. Okay, I don't know about you, that's not very useful to me. And what you're about to see is that a lot of people, they're just going to be staring at the S&P 500 and they're not going to be using the Dow Jones ETF DIA. They're not going to use any of these beautiful charts that we have across the value side of the market in a lot of these really important and liquid ETFs. So here's XLF. This is a better view of the market probably than the S&P 500. This is a wave 1 and a wave 2. This is a wave 3 and this is a wave 4. So this wave 3 went past the 161.8% extension of wave 1. Then we put in a wave 4 at the 38.2% retracement. This wave 4 ends with momentum divergence. A lot of these wave 4s that we're going to see across the market end with momentum divergence. So we've been having this debate for the past 3-4 months. Have large institutions been accumulating or distributing the XLF, the financials? Have they been accumulating or distributing the Dow Jones ETF DIA? So the most important views of the market right now are these wave 4 lows that we put in across the market. This is a wave 1 and a wave 2. This is a wave 3 and a wave 4. The length of wave 1 placed at the wave 4 low in the next 2.5, 3 months max should take the XLF all the way to 43. So if I was a bear in the stock market and I've noticed that we've already broken above this wave 3 high, we've already confirmed that this is the wave 4 low and we're within a wave 5 right now, I wouldn't even think about shorting the stock market or buying puts until XLF reached 43. Okay, and if I'm a bull, I'm going to feel pretty comfortable being generally bullish the stock market if XLF continues to hold this wave 4 low of 34.90. And then I would expect that the wave 5 target of 43 gets hit in the next 2.5, 3 months. But XLF above 34 is very important. It's a lot more useful than SPY above 421. KBE, the banking sector, this is another ETF of banks. It's a very clear, the whole point is that these are 1, 2, 3, 4, 5 waves impulses across the market. These wave 4 lows are the lows that I think are a lot more useful to market bulls right now than anything on the S&P 500. This is a wave 1 for KBE, a bank ETF that takes 12 weeks. This is an ABC correction. We put in a wave 2 low. We have a large wave 3 impulse. We have an ABC correction that ends between the 23.6 and the 38.2% retracement. So this wave 1 that took 12 weeks, placed at this wave 4 low, gives in the next 3 months a time target where KBE, all these bank stocks are going to hit 62. We're going to hold the 38.2% retracement of 45. We're definitely not going to go below the 50% retracement of 42. But if KBE is above 45 in the next 2.5, 3 months, it should go on a wave 1, 2, 3, 4, 5 higher. That will be the length of wave 1 placed at the wave 4 low. So if KBE, these banks are going on another 15, 20% rally higher as a sector, it's probably not going to be a good idea to short the stock market during that time. And it's all over, right? How many times have we talked about Berkshire Hathaway? It's this exact same idea. This is a wave 1. This is a wave 2. Huge wave 3 impulse that ends on that exact same May 10th high. The Dow Jones ETF, DIA, has already broken this May 10th high. XLF, the financial sector ETF, has already broken the wave 3 high. And now Berkshire Hathaway is doing exactly what we thought. This was wave 1 and wave 2, large wave 3 impulse. This is that textbook wear you out wave 4 that ends with momentum divergence. And now we're about to break above this wave 3 high on Berkshire Hathaway. We're going to confirm all of this was accumulation. And this is the base. The most conservative view of Berkshire Hathaway says the length of wave 1 placed at this wave 4 low will take Berk B to 310, and that Berk B will not go below 270. So it's very unlikely while Berkshire Hathaway is on its way to 310 that the stock market will be crashing. Okay, that's called trading the market as a whole. You're not going to see any pictures on FinTwit of the financials. I can guarantee you that. Okay, these ETFs, EWU and EWP, I'm just using because this is across the market that we're seeing these wave 5s develop. So this is EWU. This is an ETF that tracks the United Kingdom. So this is a wave 1 and a wave 2. This is a wave 3, and now we've had a wave 4 in between the 23.6 and the 38.2% retracement. All I'm trying to show with EWU and EWP is the idea that this 1, 2, 3, 4, 5 waves impulse is all over the stock market, okay? And you have to look at the market as a whole. This is wave 1, this is wave 2, this is wave 3, and this is wave 4. The length of wave 1 placed at this wave 4 low will take EWU to that big round number of 40. Okay, so EWU and EWP, they don't have really liquid options markets. Okay, I'm not sure these are great setups, but there are a lot of evidence that we're seeing, what we've been seeing across XLF, across XLI, across the financials and the industrials. The idea of a wave 5 higher is needed. Okay, and we're pretty early into the stages of this wave 5. So EWU goes on a wave 1 and a wave 2, large wave 3 impulse, wave 4 ending between the 23.6 and 38.2% retracement. EWU will hold above 30 to 29, and it'll go the length of wave 1, placed at the wave 4 low, and it will reach 40. Okay, it's very unlikely that the stock market is crashing while an ETF that tracks European stocks is ripping to 40. Okay, it's the same idea with EWP. Okay, this is Spain. It's all over the market. It's all over the world. This is a wave 1. That's a wave 2. This is a huge wave 3 impulse. And now we have a wave 4 ending at the 38.2% retracement of wave 3. So the length of wave 1, right? This wave 1 that's only about 2 months placed at this wave 4 low says in the next 2 or 3 months, we will not see EWP, the Spain ETF, go below 25, and the length of wave 1 placed at this wave 4 low will take it all the way to 33. Is that a great setup? Is that a great opportunity? Maybe not, but it's a lot of evidence, just with EWU, with EWP, with all these financials, with all these industrials, that it's the exact same 1, 2, 3, 4 wave 5 higher that we're looking for. And we're probably, if we were bearish, we probably wouldn't want to be shorting the stock market until some of these wave 5 targets were hit. Okay, so EWU, EWP, XLF, Berkshire Hathaway, the KBE Bank ETF, there are a lot of wave 5 higher across the market. Another one, Disney. This is a wave 1 and a wave 2, a large wave 3 impulse. We have an ABC correction, and we put in a wave 4 low at the 38.2% retracement. I've been talking about Disney in the 170s. We've had 2 pops close to 190, and we've retraced them. So I think right now we're still just forming this sideways price action, and this is all just like XLF, just like the Dow Jones. Is this accumulation or is this distribution? Okay, I think we're about to find out that this was clearly accumulation. We're gonna break this wave 3 high, we're going to go the length of wave 1, placed at this wave 4 low. This huge rally, or not a huge rally, but this wave 1 rally is 2.5 months. That means this wave 5 rally could be 2.5, 3 months at the max. The length of wave 1 placed at the wave 4 low gives a conservative target for Disney of 216, so long as we don't go below the true invalidation, which is the 50% retracement, which is 155. I think the better invalidation is 167. This wave 4 low, we're going to hold above 167 for the stop level. The invalidation level is that 50% retracement of wave 3, 155. I don't think either of those levels get broken. I think we go the length of wave 1, place at the wave 4 low. We reach a wave 5 higher of 216. So if I'm a bear, I wouldn't even think about shorting the stock market until Disney was at 216, and that even would feel pretty early. But there's a lot of wave 5 higher across the stock market that need to occur, in my opinion. And that Disney is just one of many. XLI, I mean, this is another one, right? This is a huge ETF. The Dow Jones ETF, the Dow Jones Industrial Average, has already broken above this May 10th high. So for XLI, I believe that this, from this exact same low of October 30th, was a wave 1 and a wave 2. This was a wave 3 impulse and an ABC correction, put in another wave 4 that ends with momentum divergence. So I'm keeping track of all of these wave 4s that are ending with momentum divergence. I believe right now XLI will go the length of wave 1, placed at the wave 4 low, and it will reach 114. So this rally is from October 30th to January 15th. That's another 2.5 month rally placed at this wave 4 low that gives a wave 5 target of around 114. So what's a very important invalidation level for XLI is going to be the 50% retracement of wave 3, which is 95 for the invalidation. The stop level is going to be 98. For this wave 4 low, I don't think we're going to break below 98, even though that's pretty tight. And I think the length of wave 1 placed at the wave 4 low will take XLI on a wave 5 higher pretty conservatively to 114. So if I was bearish the stock market, I wouldn't even think about shorting the stock market or buying puts until XLI reached 114 for that wave 5 target. The point is, I think a lot of bears are early right now. Okay, we look at Boeing. I think this is a smoking gun. Just like XLI, a huge wave 1 and wave 2, and then we have another wave 1 and another wave 2. So the length of wave 1 placed at the wave 2 low will take Boeing to 296. When we talk about XLI going on a rally higher, I expect that Boeing is going to have some fireworks between that rally that takes XLI on a wave 5 higher to 114. That's in the next 2.5, 3 months. I'm expecting some fireworks from Boeing. Okay, I believe this is a wave 1 and a wave 2. If you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, Boeing's been all over the bar chart straddle and strangle screener. It's got 0% implied volatility ranking percentile that it hit a couple of times last week. Okay, it's gearing up for a monster move. The debate right now is not whether or not Boeing is just not going to move. Is this large move going to be to the downside or to the upside? So what the debate is this a huge cup and handle pattern? And is this over a year of institutional accumulation, or is this a year of institutional distribution? Okay, I think it was pretty clearly accumulation. And Southwest Airlines, a lot of these airlines, they've already broken, those pre-March 2020 highs. So I think right now, Boeing is a very important stock. We don't want to see it break below 191. And if it doesn't, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low will take Boeing to about 296 to 307. In the short term, we'll have a shallow wave 4 correction, and we'll probably go on a wave 5 higher. Okay, but the point is, a lot of bears are calling for major tops right now with Boeing below 300, with the XLI ETF, not even close to a wave 5 target of 114. The financial ETF and Berkshire Hathaway and Disney, they're all giving a lot of evidence. They've got more upside. Okay, and I think when you look at Boeing, you kind of get that idea, a lot of people are way too early in calling for a crash right now. Boeing going to 300 is pretty conservative. Ultimately, I expect that this huge wave 3 doesn't end until the meeting of this pitchfork, which could be as high as 400. That Boeing will follow Southwest Airlines above these pre-March 2020 highs. So I've got a lot of ambitions for Boeing. If it's above 191, it's going to have a large move. I think that move is clearly going to be to the upside. Facebook, Twitter, and Pinterest. This is a wave 1 and an ABC correction put in a wave 2 low for Facebook. Now remember, for Facebook, when we had this wave 1 and we made a new high on the relative strength index, Right around here at the end of April, we were using the fact that the RSI was making a new high with price as evidence we couldn't label this a wave 5. Very unlikely this was the top that we formed at 331, and it wasn't. It was, in my opinion, another wave 1 and another wave 2. We went on a big wave 3 impulse, and now we're putting in, or have already put in, wave 4 at the 38.2% retracement of wave 3. So the length of wave 1 placed at the wave 4 low will take Facebook all the way to 425. Now this whole rally is only 2 months, so it's actually less than 2 months. I think 2, 3, 4 months conservatively, 2 months aggressively, 2.5 months probably the just right time target that Facebook will hold the 38.2% retracement of 347. In my opinion, it's definitely going to hold the invalidation level, which is the 50% retracement of wave 3, which is 337. Facebook will hold these levels. It will go the length of wave 1, place at the wave 4 low. It will reach 425 for this wave 5 target. I think pretty conservatively, that's going to happen in the fourth quarter, and that could happen in the next 2 months. If we look at Pinterest, we look at Twitter, there's a pretty interesting development on Pinterest. Essentially, in my opinion, no matter how you count Pinterest, this is a wave 1 from this IPO high, and we have a wave 2 low. So this is either another wave 1 and another wave 2, or this is a large wave 3 and a wave 4 that we're putting in right now. Either way, in my opinion, the length of this rally from March to February is going to get replicated with a lot of growth stocks. I think Pinterest is getting ready for another leg higher. And if we look at Pinterest right now, we're going to see that even if we break that low of 43, it wouldn't really be the end of the world. So if Pinterest did break this low of 100, if Pinterest did break this low of 53, it wouldn't be the end of the world. I would expect that we would see an ABC correction where the length of wave A placed at the wave B high is where wave C ends, and that should end around 46 if Pinterest breaks this low of 53. Okay, so I'm not projecting that, Pinterest is a short right here or that it's definitely going to break below 53. Okay, for anyone who's new, in Elliott wave theory, you never trade corrective structures, ever. You never trade an ABC correction. You only trade waves 1, 3, and 5. Okay, so if Pinterest did break below this low of 53, I expect the correction would get capped around 46 because that's the length of wave A placed at the wave B high where wave C's ended. Now, if Pinterest doesn't break below that low, then there's a chance wave 4 is already in right now. And this is an ABC correction that's already ended. But the point is, even if Pinterest loses 53, I would expect a pretty nice reaction at 46 before we have a huge rally to the upside. So Pinterest could look something like this, where this is wave 1, that's wave 2, this is wave 3 and wave 4. The length of wave 3, place of the wave 4 low, will take Pinterest to 134. If it began at 46, we see Pinterest go all the way to around 127. But the bottom line, I think Pinterest has a lot of upside, especially when we look at Facebook going into the 420s. And now when we look at Twitter, a lot of these social media stocks, they're looking pretty good. Twitter's not the best setup because we're pretty far away from the invalidation level, which is 49. But when we talk about Pinterest and Facebook, I think it's important to get, Twitter in there for that holistic evidence that the social media stocks will go on a rally higher. If we look at Twitter right now, from this May 2016 low, we form a wave 1 and an ABC correction puts in a wave 2 low. I believe this huge rally was a wave 3 that ended at 80, and then we put in a wave 4 at the 38.2% retracement. We formed this nice wick on the monthly chart for Twitter, and I think if we take the length of wave 1 and we place it at the wave 4 low, that gives a very conservative wave 5 target of 83. I actually don't think that's accurate. I believe that wave 5 will be the length of wave 3 placed at this wave 4 low, and ultimately we're going to see Twitter go all the way to 110. Now, for Twitter, it's not really the best setup because we're very far away from the invalidation level, which is 49, and the price is currently at 62. But I think when we talk about Pinterest and Facebook having a lot more upside, it's important that we can see that Twitter in this social media sector would have a lot of upside as well. And just look at this huge base, right? This huge, IPO base, right? Oh, everyone who bought Twitter, at 15 and 20, right? They must have gotten scammed because we broke below this IPO low. Okay, this is a huge, institutional accumulation. We've broken this IPO high. I think Twitter's got a lot more upside in the long term, and this is just an example of what growth stock investing can do. Okay, you're gonna feel like an idiot in the biggest winners. You will. Okay, they made you feel like an idiot in Twitter for over a year. Okay, so if you have some stock, some growth stock that's the next best thing since sliced bread, and you have a 5% stop loss, you're not going to wake up with it in 3 years, okay? They're going to make you feel like idiots in the best stocks, especially these growth stocks. So here is ROKU. Let's look at ROKU on the smaller degree. I think this is pretty important. It formed a very clear 1, 2, 3, 4, 5 waves impulse when it broke this wave 3 high. So I think most likely, if we look at ROKU, we've broken this wave 3 high. So let's talk about the larger degree for ROKU. This is a wave 1 and an ABC correction put in a wave 2 low. We have a huge wave 3 impulse. Then we have an ABC correction end at the 38. Actually, it ends at exactly the 50% retracement. The more conservative view of ROKU says this is a wave 3 and that's a wave 4. So the length of wave 3 placed at the wave 4 low gives a wave 5 target of 707. Okay, just like AMD going to 136. That sounded crazy. It didn't sound so crazy when ROKU was at 450. I think right now what we're seeing is that this is another wave 1 and another wave 2. ROKU is beginning a wave 3 of a larger degree, wave 5. So this is wave 1, that's wave 2, that's wave 3. And when we put in this low at the 50% retracement of 272, that was wave 4. Okay, we're not going to break that low, and we've already broken this wave 3 high. We've given a lot of evidence. This is institutional accumulation. We're within a larger degree, wave 5 higher. This is wave 1 of wave 5. That's wave 2 of wave 5. Waves 3, 4, and 5 of wave 5 will take ROKU to the length of wave 3, place at the wave 4 low. That's going to see ROKU reach 707. We look at the options market on ROKU. We'll see pretty expensive options still. So I typically will tweet about stocks as setups for myself when the implied volatility ranking percentile is 0%, but there's still a lot of stocks that could be great evidence. And I think ROKU right now, clearly it's broken this wave 3 high, and it did so by forming a 1, 2, 3, 4, 5 waves impulse. That's a lot of evidence. We're not going to go below 272. This is a larger degree wave 5 we've begun. Most likely this is wave 1 of wave 5 and wave 2 of wave 5. Waves 3, 4, and 5 of wave 5 will take ROKU into the 700s, and that could happen within the first quarter of 2022 pretty aggressively. We look at Netflix right now. This is another pretty one where we have a 1, 2, 3, 4, 5 large degree wave 1 and an ABC correction puts in a wave 2 at the 61.8% retracement. So this wave 1 takes less than 2 months, and we place it at the wave 2 low. The minimum wave 3 target is about 584. We zoom out, I'm showing that the 161.8% extension is 606. That's the textbook wave 3 target. We would see a shallow wave 4 correction that conservatively will retest the wave 1 high before we go on a wave 5 higher. The length of wave 1 placed at the wave 4 low will take Netflix pretty conservatively into the 640 range. The 650 range for a pretty conservative wave 5 target. We'll see 1, 2, wave 3 will go to 584 to 500 to 606. We'll have a shallow wave 4 correction that conservatively will retest the wave 1 high before we go on a wave 5 higher. There will be at least the length of wave 1 placed at the wave 4 low, ultimately taking Netflix into the 650s. I think 650 pretty conservatively will get reached by the end of the year. We see this is a 2-month rally. So this wave 3 could take 2 months, and with that quad witching date around the corner, we're seeing a lot of software stocks and a lot of clean energy stocks, a lot of these growth stocks. They're getting ready for large moves, and that quad witching date, even the whole quad witching month of September could be a catalyst for that large rotation that we're expecting. If we look at Amazon right now, this is a 1, 2, 3, 4, 5 large degree wave 1. We have an ABC correction, and we put in a wave 2 low. So we're expecting this monster rally. Okay, I got told Amazon doesn't have the juice. Well, the reason the retail traders thought that was because Amazon had 0% implied volatility, ranking percentile. It's a pretty similar situation now. It's on the bar chart, straddle and strangle screener. We're going to have a large move for Amazon. So Amazon did not reach the length of wave 1, placed at the wave 2 low. It stopped about $25 short of that. I'm not taking that as defeat. I think that's evidence that this wave 3 is still in progress, and that this 1, 2, 3, 4, 5 larger degree wave is a wave 1 and another wave 2. So this is wave 1 and wave 2. This is another wave 1 and another wave 2. So the pretty tight invalidation level for Amazon is this low of 3,127. Okay, the wider invalidation is going to be from the original setup, which was around 3,025. So 3,025 to 3,127. I don't think the bears will get Amazon below that, and we'll see that this is a wave 1 and wave 2. This is another wave 1 and another wave 2. This wave 1 takes about 2 months. And then we place it at that wave 2 low. It gives a minimum wave 3 target of about 3,850, 3,850. And then I measured the 161.8% extension of wave 1 for that textbook wave 3 target, which is around 4,172. So potentially just within wave 3, we could see Amazon going into the 4,000s in this next quarter. And this could happen a lot quicker than people think. But even if we go to the conservative wave 3 target and have a shallow wave 4 correction, I would expect a wave 5 higher that would be the length of wave 1 placed at the wave 4 low. Ultimately, I'm still expecting that Amazon will go all the way into the 4,300s. It's going to be another one of these growth stocks, another one of potentially these stay-at-home stocks that does very well. That when we talk about Netflix and Roku and Fastly and Datadog and a lot of these stay-at-home stocks, they're showing very nice setups. And with the quad witching day approaching, I would be very surprised if we didn't see, some of these growth stocks, some of these solar energy and software stocks pick up the mantle in the fourth quarter that a lot of the leaders in these sectors have already begun in the third quarter. So we'll talk about that in a second with these software stocks. But this is for Amazon, a wave 1 and a wave 2. And in my opinion, it's another wave 1 and another wave 2. If Amazon's above 3,025 to 3,127, I'm expecting a wave 3 of wave 3 to begin for Amazon. And if we look right now, let's talk about Palantir. Let's talk about Unity Software, some of these software stocks, because we're seeing the stage is set for a pretty nice rotation into the growth stocks in the fourth quarter. We've seen a lot of growth stocks begin. Some of the leaders of the growth stocks began their rallies in the summer. And I think some of these laggers in the growth sector, they're going to really pick up the pace in the fourth quarter. For Unity Software, this is a 1, 2, 3, 4, 5 large degree wave 1. Now this rally, it's entirely contained within the fourth quarter of 2020. It's almost exactly 3 months. We have an ABC correction. We put in a wave 2 low. So I believe this is a wave 1 and this is a wave 2. This is another wave 1 and another wave 2. We've broken this wave 1 high. We've given a lot of evidence we're within a wave 3 of a larger degree, wave 3, that ultimately is going to take Unity Software to the length of wave 1, placed at this wave 2 low. I'm expecting this stock is going to pick up the pace and go reach 186 so long as it holds above this low of 92.50. But this is a very similar chart to Palantir, where it's a 1, 2, 1, 2 Elliott wave nest, the length of wave 1 placed at the wave 2 low, takes Unity Software to the median of the pitchfork. It's going to prove that this is all institutional accumulation on a stock that is very young in its life cycle, that's trading very closely to Palantir. I think Palantir right now is playing follow the leader. It's following Unity Software with that quad witching date approaching, even with the entire month of September. We saw in June that the rotation kind of began before that quad witching date. I think even just in September, we're going to start to see signs of this rotation into some of these growth stocks. Here's Palantir. It's a 1, 2, 3, 4, 5 large degree wave 1. I mean, this is another one. This is from October to January of 2021. It's another 3 or 4 month huge impulse, right? We have an ABC correction and we put in a wave 2 low at 17.05. We form another wave 1 and another wave 2, and we don't break this low of wave 2. We turn around. It looks like we're following Unity Software above this wave 1 high. That's going to confirm that we're within a wave 3 of a larger degree wave 3. While Unity Software is heading to the 180s, I expect Palantir will head to the length of wave 1, placed at the wave 2 low, and it's going to go on a huge rally into the 50s. And it's going to go reach the median of this pitchfork. It's going to confirm, like Unity Software, like a lot of these clean energy stocks, this is all almost for the entire year institutional accumulation since January and February. We've already seen a lot of software stocks have led above that first quarter high. Cloudflare, we're about to look at Datadog, have already broken these first quarter highs. I think there's a lot of leading indicators in the software sector that say that some of these laggards are going to really pick up the mantle, and this was all institutional accumulation on these stocks. Okay, I posted about Autodesk, breaking through new highs. There's a lot of leadership in the software sector. I think Palantir, Unity Software, they're going to play follow the leader. So here's Nano Dimension. This is a wave 1 and a wave 2, and this is a pretty clear, in my opinion, 1, 2, 3, 4, 5 large degree wave 1. Okay, so notice this wave 1 is almost entirely contained within the fourth quarter of 2020, and it takes 3, 4, 5 months at the most that this whole rally, is contained in. So the widest invalidation level is not very useful. It's this wave 2 low of around 1.31. So this is a 1, 2, 3, 4, 5, another wave 1. Then we have an ABC correction that puts in a wave 2 low. Now, we broke below this low of 5.39. So we've invalidated the idea that wave 2 ended right there. Okay, but I still think, and I've had, that the 78.6% retracement of 4.86, I did not expect Nano Dimension will break below. Okay, it still is not broken below 4.86. I think it's putting in wave 2, and then we're going to see right when that quarter switches, it's going to be like a light switch that this is all institutional accumulation. Nano Dimension is going to go on another huge rally, very similar to this one that only takes 4, 5, 6 months, and it's 1, 2, 3, 4, 5, large degree wave 1. It's going to break above this high of 17.89 and confirm this is all institutional accumulation. This is a monster base on a growth stock, and when we get above this high, it's going to confirm that this is got a lot of upside, not just to this wave 3 target of 21, but even higher down the road. So if you're in a stock that you think is a monster, then guess what? The institutions know it too. Okay, they probably found that stock a lot earlier than you did, and they've probably been accumulating it for a very long time, doing everything in their power to shake you out. So growth stock investing, it's not for the faint of heart. Most people, they can't handle, feeling like an idiot while Twitter is forming, all these lows below this IPO low. But what's really going on, large institutions are loading up Twitter while retail traders are feeling like idiots, okay? And that's, what it takes to be a growth stock investor, okay? And a lot of people, they don't have it, okay? If we look at Datadog right now, this is a pretty interesting chart. It has a 1, 2, 3, 4, 5 and forms another large degree wave 1. But what I really want to focus on for Datadog is these dates, okay? This is from 3/16, the middle of March, to 10/15, 10/14, the middle of October, okay? That's a 7-month rally. These are the exact same dates that Fastly forms on its 7-month rally. They're the exact same dates that Alibaba formed on their 7-month rallies. Okay, so I think Datadog right now, in a very similar way that Cloudflare and Autodesk, and some of these software stocks we talked about as being leaders are, leading the software sector higher. Datadog is another one. We've already broken the wave 1 high of 117. So this was a wave 1, this was an ABC. Wave 2, this was an expanded flat because we slightly broke this wave 1 high. But I believe this is an ABC correction. We ended at the 50% retracement. So the length of wave 1 placed at the wave 2 low gives Datadog a minimum target of 158. Okay, we're not too far away, but what's really important about Datadog, is this a great setup? No, this is not a great setup right here. But what is important, Datadog has broken this 10-13 high, and it's broken this first quarter high. Okay, it's confirmed that this was all institutional accumulation. This was all a massive base, and when it broke above these highs, it did so by forming a clear 1, 2, 3, 4, 5 waves impulse. That's a lot of confirmation. This is a new bullish cycle that's begun. I know it's far away, but this low of 69 is probably never going to be broken, for years. In my opinion, this low will not be broken for years, and we kind of already know if Datadog pulled back, this would be a huge buying opportunity. So this is a 1, 2, 3, 4, 5 large degree wave 1. I think what Datadog is really doing, more so than being a great setup, is a lot of evidence that the software sector has a lot more upside. And Datadog and Cloudflare and Autodesk, they're acting as leading indicators. Fastly, 1, 2, 3, 4, 5 large degree wave 1. Okay, this was moving step for step with Datadog during this rally from 3/16 to the middle of October. I believe right now it's lagging Datadog, but we have that quad witching date is around the corner. Okay, so the only way to play Fastly right now is pretty tight, that this low of 33 is not broken. Okay, if that's the case, this 7-month rally placed at this low gives a minimum wave 3 target of 159. We have a shallow wave 4 correction, and then we expect that even if wave 4 retests the wave 1 high, which I generally say is pretty conservative, we'd expect a wave 5 higher to be the length of wave 1 placed at the wave 4 low. Ultimately, down the road, that would take Fastly to 262. Okay, that sounds crazy right now, but that's 1, 2, 3, 4, 5 waves. So what's going to happen when Fastly completes 5 waves and reaches 262? That's going to form 1, 2, 3, 4, 5 waves of a larger degree, wave 1. Okay, so this is the power of growth stock investing. We are so close to the beginning of these life cycles for a lot of these stocks. And when we look at XPEV, we look at Li Auto, once we've confirmed that this is 1, 2, 3, 4, 5, wave 1, and this is wave 2, waves 3, 4, and 5 won't be the end of Datadog, and it won't be the end of Fastly, and it won't be the end of XPEV in their life cycles. It'll be the large degree wave 1. It's going to be the beginning of Fastly's bull market in the bigger picture. So in general, the closer the IPO date, the higher the risk and the higher reward. I think for Fastly, this is one, might be worth it. It's 1, 2, 3, 4, 5 waves, the exact same 7-month rally with Datadog. Datadog's already broken this October high and this high from the first quarter. It's an ABC correction. If Fastly holds above 33, this could be one of the best opportunities in the market, just generally speaking. That in the long term, Fastly is one of those stocks that it could be Nvidia in the 2000s. It could be some of these e-commerce stocks or social media stocks in the 2010s. Okay, but I can tell you what it isn't. It's not for the faint of heart. Okay, Fastly, in my opinion, we don't want to see it below 33. But if it did break below 33, I'd be a lot more opportunistic about buying Fastly than I would about freaking out that we broke below 33. So I think Fastly will go the length of wave 1, place at the wave 2 low. It's going to reach 159, have a shallow wave 4, and go on a wave 5 higher. Fastly, in my opinion, is best viewed as a long-term opportunity for myself personally. I want to talk about Alibaba. This is another one where we form from this low on the middle of March, right? Remember, just like Datadog, just like Fastly, from middle of March to the middle of October, a stay-at-home stock, a software stock that we're all being told to stay away from, goes on a pretty ripping 7-month rally. So on the larger degree picture for Alibaba, I think it looks something like this, where this is a wave 1 that we form, and then in 2018, we put in a wave 2 low. So I'll make this red right here for Alibaba. I think it looks something like this. I'm really just trying to show what the opportunity could be, especially with these quad witching dates coming around. And when we look at XPEV, we look at Li Auto, we look at NIO, there's a lot of evidence that Chinese stocks as a sector are going to do very well. When we look at Amazon, Walmart, Procter & Gamble, I'm not saying that Walmart and Procter & Gamble will move with Alibaba, but a lot of these consumer stocks, a lot of these e-commerce stocks, they're poised to do very well. We're going to look at the Wayfair chart in a second, but I think Alibaba could be a 1-2, and then it's another 1-2, and then it's another 1-2. I believe Alibaba is about to begin wave 3 of wave 3 of wave 3. And this could be, very similar. I mean, we call this the Amazon of China. And this could be a buying opportunity that could be like the Amazon of China. I believe this is a wave 1 and a wave 2. And then we have another 1, 2, 3, 4, 5, large degree wave 1. We have an ABC correction. We pull back to the 78.6% retracement. Now, we have broken below the 78.6% retracement. So I had that as the stop level. We broke below 184. This has technically been stopped out. So I think Alibaba might be safer, quote unquote, if it's above this 61.8 to 78.6% retracement zone. It'll give a lot of evidence that we've put in wave 2, and we're going to form, or we've already begun waves 3, 4, and 5 higher. But I think right now I'm still expecting that, especially as the quarter comes to a close, we're going to see that all of a sudden these Chinese stocks and these software stocks that are forming a base, this is the left side of the base. All right, this is just like Fastly, the left side of the base. All of a sudden the quarter flips, right side of the base, and we're up here forming a bull flag, and all the classical traders are saying, buy this cup and handle pattern. Okay, so I think Alibaba has a lot of upside. We are below 184, so this has been stopped out, but I'm still very bullish on this stock. A very wide invalidation would be this low of 147, but right now, I want to see Alibaba go recover the 78.6% retracement and the 61.8% retracement of 184 to 213. So that's Alibaba. I want to talk about Wayfair real quick. It's really just more evidence. It's almost identical, I believe, from a fundamental perspective to Alibaba. Someone's going to disagree with that. But just from a sector analysis, Chinese e-commerce stock, this is a wave 1 and a wave 2, right? Get off the bus, right? When we look at all these, opportunities, yeah, they're going to get you out. Wave 1, wave 2, wave 3, wave 4, and wave 5. Okay, the institutions, they want your shares. They're going to get you out of these monsters. We look at Wayfair right now. I believe that was a 1 and a 2 on the largest degree. And then we formed a huge wave 3 impulse. We pulled back to the 38.2% retracement for wave 4. So this is only a 5 or 6 month rally. Okay, and I don't think the time target should be 5 or 6 months, but I believe that this is a lot of evidence, especially when we look at Alibaba and a lot of these Chinese stocks. We're getting ready for a huge rally in the e-commerce sector and the Chinese sector. Most likely, in my opinion, that's going to happen sooner rather than later, especially with the quad witching date coming in the middle of September. I think this whole rally is going to be replicated, and that ultimately will take Wayfair all the way to 552. You know, that could happen once this rally begins, you know, within 6 or 7 months of it beginning. So I think this is a wave 1, that's a wave 2, this is wave 3 and wave 4. So we're within a larger degree wave 5. Okay, the larger degree wave 5 target is the length of wave 3, place of the wave 4 low. That's 552. I believe we're in a large degree wave 5. On the smaller degree, this is wave 1 of wave 5, and we've completed wave 2 of wave 5 right now. So if Wayfair is above 221, wave 4 is in. We're within a wave 5 higher right now. Ultimately, that's going to take, in the bigger picture, Wayfair on a rally that I expect to take half a year into the 550 range. Here's ICLN. We've talked about this sector a lot. In my last video, we talked about a lot of components, and we're just going to touch on this real quick. This is a wave 1, that's a wave 2, huge wave 3 impulse, and a wave 4 that's ending at the 50% retracement. Okay, we've got a quad witching date coming around. I think ICLN is going to have a monster move. I think it's going to be to the upside, and this is going to be a sector-wide rally in clean energy. Okay, this huge rally from 316, you know, to January, right? It sounds so crazy that all these stocks are going to replicate these rallies until Advanced Micro Devices does it. Okay, but the length of wave 3, place of the wave 4 low, takes ICLN to 46. Okay, and I think that could happen. I really think in the first or second quarter of 2022. That's a pretty wide swing for an ETF. But I think we're going to hold the 61.8% retracement of 18. We're going to go break above these highs, you know, confirm, yes, this is all institutional accumulation. This is all a huge base, and we're going to break above this wave 3 high, confirm we're within a larger degree wave 5. In my opinion, the length of wave 3, place of the wave 4 low, will take ICLN to 46. So long as we're above 18, that view is going to be valid. And this is the largest holding of ICLN. It's Vestas Wind. It's an ADR. It doesn't even have an options market, I don't believe. It's a very illiquid vehicle, but this is the top holding of ICLN. The reason I'm showing Vestas, ticker symbol VWDRY. Okay, this is not a setup, but I do think that this is a lot of evidence. It's a 1, 2, 3, 4, 5 large degree wave 1. This is a clear 5 waves impulse. Okay, when we look at First Solar, when we look at Enphase Energy, this is all I'm trying to show with these stocks. That's 1, 2, 3, 4, 5 waves. Okay, that's a wave 1. What's that mean? Why do we care that I can count this as 1, 2, 3, 4, 5 waves? It really strengthens the idea that is a wave, that's a very important low that's not going to get broken, and we've begun a new bullish impulse higher. So this is the top holding of ICLN. Very clearly, it's formed 1, 2, 3, 4, 5 waves. I think Vestas Wind, it's an ADR. It's going to hold above 11. Right now, it's really just evidence. It's formed 5 waves from that March 5th low. It's going to hold above 11, and that's just evidence that that low is not going to be broken. The top holding of ICLN in the clean energy sector has formed an impulse structure. Before we talk about Tesla, I want to talk about First Solar and Enphase Energy. Really just hone down this point. So on the largest degree view of First Solar, this is a huge, 8, 9, 10-year nest. Wave 1, ABC wave 2, wave 1, ABC wave 2. Okay, so this is a monster nest, and then we've broken above both of these wave 1 highs. So I'm going to zoom in on the smaller degree, but we've kind of confirmed for the past 8 or 9 years, not months, we've been accumulating First Solar as a market. And I think that on the, kind of slightly larger degree, it's a 1, 2, 1, 2 Elliott wave nest. We're going to see the length of wave 1, place of the wave 2 low, take First Solar above this wave 1 high of 112. But really what I want to focus on for First Solar and Enphase Energy is the smaller degree count. There's no way to count First Solar and Enphase Energy where we haven't formed 1, 2, 3, 4, 5 waves. Why is that important? Because these are components of ICLN. They have formed 5 waves from the May 11th low. They've given a lot of confirmation. We are not going to break below 67. We're not going to break below that May 11th low. This is most likely 1, 2, 3, 4, 5 waves for First Solar. We could be more aggressive than that. Okay, but the whole point is once you form 5 waves from a low, it really strengthens the probability that that is an impulse structure that has begun. Okay, we're within a new bullish cycle. For me, First Solar probably looks something like this, where that's actually wave 1. And the length of wave 1 places the wave 2 low. We'll take First Solar to 106. We'll have a shallow wave 4 correction and go on a wave 5 higher. Ultimately, we'll see First Solar above that larger degree wave 3 high of 112. We'll see First Solar into the 120s. I like First Solar. I've always talked about it, as a great hold, as a great leap play for myself personally. But what's important right now, it's 1, 2, 3, 4, 5 waves from that low. Okay. And we look at Enphase Energy, that strengthens the case. That May 10th, that May 11th low is extremely important, okay? There's no way to count Enphase Energy right now, or Vestas, that wind company that's the largest holding of ICLN, or First Solar, where you're not forming 1, 2, 3, 4, 5 waves from this May 11th low. So that really strengthens the probability. This is a new bullish cycle that's begun for Enphase Energy, and it's begun for First Solar, and it's begun for Vestas Wind Energy. What's that mean? Why do we care? It really strengthens the probability that May 10th, May 11th low is not going to be broken. Honestly, in my opinion, it's not going to be broken ever. Okay, that's wave 1 most likely, and this is wave 2. We can see Enphase Energy go on a rally higher into the 240 range and a more aggressive view that's going to take it above this February 10th high. But what's important for ICLN, First Solar, a lot of these clean energy stocks, we're forming 5 waves, and we're really confirming we're within a new bullish cycle. Here's Tesla on the larger degree. This is just a very pretty view. It's a wave 1 and a wave 2, huge wave 3 impulse. An ABC correction putting in wave 4. So the length of wave 3, places the wave 4 low, in my opinion, takes Tesla on a wave 5 higher to 1,368. It sounds almost as crazy as advanced market devices reaching 136, right? Until it happens, all of a sudden, Tesla's above 900. And it's where's the top? It's, my opinion, not going to happen until at least 1,368. And it should be noted, this is a pretty conservative view of Tesla, that this is a wave 4 we're putting in. I believe this is wave 1 and wave 2. Huge wave 3 impulse. ABC correction puts in wave 4 at the 38.2% retracement. We begin another wave 1 and another wave 2. Tesla will hold above 546. That's the stop level. That's the invalidation level. And we'll go to the wave 3 high of 929. That's the 161.8% extension. We'll have a shallow wave 4 correction and go on a wave 5 higher. What's important about Tesla going on this wave 3 to 929? That would take it above this exact same January 25th high that Apple has already broken, that Apple formed with Tesla, that we asked for weeks and for months with Apple. Will Apple ever break above this high? Okay, we said as a market that answer was going to be no for a long time, and then Apple breaks above this high. I think Tesla's going to do the exact same thing. It's going to break above this high of from January 21st, and it's going to confirm this was all institutional accumulation. This was all basing for the past 7 or 8 months. We've been loading up Tesla and a lot of these clean energy stocks as a market, getting ready for this rally higher. And the classical traders, they're going to be all over this, when Tesla's above this high, saying get into this huge cup and handle, right? Buy this huge bull flag formation. The wave theory is saying, why not buy it in this range? But anyway, the point is we're going to break above this wave 3 high. We're going to at least reach 929 in the short term, and that's going to be a huge deal. It's going to confirm we're within a larger degree wave 5. In my opinion, that's not going to end until 1,368. I'm looking for that to happen in the first quarter of 2022. Neo and Xpeng, very similar idea. If we look at Neo, in my opinion, the full count is that's a wave 1. Right up, you can't buy Neo because it broke below the IPO low, right? It's just like Twitter. They're gonna make you feel like an idiot if you're in a growth stock that's a monster, okay? Because they found it way before you, and they want to accumulate it a lot longer than you can, okay? So, and they also want all of your shares, and that's wave 1 and wave 2 of Neo, right? Anyone who bought Neo at 2 or 3 must have felt like an idiot, right? But then we have another huge wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. I think that's another wave 1. This is an ABC correction putting in a wave 2 low. I don't believe Neo will break below 30. If Neo does not break below 30, that's wave 2. We're then a larger degree wave 3 right now. And the smaller degree could look something like this, where that's wave 1 and that's wave 2. If we hold above 30, Neo will enter wave 3 of wave 3. That will very easily take it above 66. That's going to confirm, yes, just like Tesla, just like all these growth stocks, that's 7-8 months of institutional accumulation. That's a huge cup and handle that's forming, and that Neo is heading into the 90s with Tesla. That could happen in the first quarter of 2022. It's going to be a big deal to see Neo not break below 30 and then start heading above this small degree wave 1 high of 55 to confirm it's within a larger degree wave 3 of wave 3. So Neo looking very good. So is XPEV, so is Li Auto. We're just going to talk about XPEV, but XPEV, Li Auto, NIO, they're all Chinese stocks, right? We're being told, stay away from these Chinese stocks. And what are the charts saying? Then the fourth quarter, some of these Chinese stocks, a lot of these growth stocks, they're going to do extremely well. What have we also kind of talked about? The idea of stay-at-home stocks doing pretty well. A lot of these Chinese stocks are also stay-at-home stocks like Alibaba and Wayfair. Wave 1 for XPEV. That's 2.5, that's 3 months. Okay, this is wave 1. This is an ABC correction, wave 2, and we're very early into XPEV's life cycle. We IPO'd less than a year ago. This is wave 1 and wave 2. The length of wave 1 placed at the wave 2 low gives a minimum wave 3 target of 80. Why do we care about XPEV breaking above 80? That's going to confirm this stock that recently IPO'd is very early into its life cycle, and it was being accumulated for 7 or 8 months by large institutions. We talked about how XPEV has this Ichimoku cloud breakout with Li Auto. I think this is going to give kind of the best levels right now. We want to see this is going to be a cloud bounce, hopefully, for XPEV. And what that could mean on the smaller degree is this is another wave 1 and another wave 2. Wave 3 of wave 3 will take XPEV above this wave 1 high. Okay, but when you're looking at a stock that is very recently IPO'd, there is a higher risk and there is a higher reward. Okay, if XPEV breaks above 80, that's huge. Okay, that means that this is wave 3 in progress, and waves 4 and wave 5 will complete a larger degree wave 1 on XPEV's cycle. Okay, so XPEV is so young in its cycle, just like Fastly, where if we break above these highs, then that's going to be huge. That means that institutions were accumulating XPEV for months, and that they want to hold this for a very, very, very long time. Okay, so this is growth stock investing. The length of wave 1 placed at the wave 2 low. Hopefully we'll take XPEV into that 80 range. It'll break above this wave 1 high. And then the classical traders, they're going to pull out their handy dandy bull flag and tell you to buy this cup and handle way up here when we're consolidating at 80. So XPEV and Li Auto looking very good for clean energy, looking very good for growth, and looking very good for Chinese stocks. Okay, Acrimoto, I said if we got a chance to buy against this wave 2 low, that'd be a huge deal. I think for Acrimoto, we're getting that chance. This is a wave 1, cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. It ends at the 78.6% retracement. I believe Acrimoto will hold above 7.32, and it will go the length of wave 1, placed at the wave 2 low. Acrimoto will head into the 40s, have a shallow wave 4 correction, and go on a wave 5 higher. But I think Acrimoto is going to break above this high of 36, just like Tesla, just like NIO. Yeah, that was 6, 7, 8 months of institutional accumulation. And with that quad witching date around the corner, I think we're going to see Acrimoto is going to pivot right before it reaches 7.32, enter wave 3 of wave 3, and go break above this wave 1 high. So I think in the fourth quarter, there's going to be a lot of days where we're seeing, this is the growth stock of the day that's exploding all of a sudden. We talked about First Solar. We talked about Enphase Energy. We talked about Acrimoto. Let's finish it up with some value stocks. Here's Pfizer. Implied volatility ranking percentile. The implied volatility percentile right now is 82%. That means for the past 82% of days for the past year, implied volatility has been lower than it currently is. That means that 80% of the past year, options have been cheaper on Pfizer than they are now. So the option sellers are at a large advantage over option buyers on Pfizer. All that's to say is that some consolidation sideways, we kind of want to see that at this point. Let's talk about what Pfizer's done. I mean, this is what investing can do. Okay, and a lot of people, they'll clown you if you stay in a stock that's not outperforming that quarter. Okay, you probably felt pretty dumb holding Pfizer, hypothetically, when it was like Pfizer was a pretty hated stock in the low 30s. And a lot of people, they'll say, you got to cut a loser. Okay, just because the stock is not outperforming in one particular quarter doesn't mean that as soon as that quarter flips, right, as soon as the first quarter ends, boom. Okay, so I like to be across the market diversified, okay, because the money is flowing from sector to sector, and just because you're in a monster and it's not getting money that quarter, in my opinion, that doesn't mean you cut it. Okay, that's just me. What's Pfizer done? It's broken above this high from 2018. That's confirmed for the past 2.5 years. Large institutions have accumulated Pfizer, and that the length of wave 1 placed at the wave 2 low will take it to 62 at the very minimum. Okay, what's it mean on the larger degree? Well, we've broken above this 1999 high on a dividend aristocrat. We've broken the all-time high. So what does that mean? That means that this is 20 years of institutional accumulation and basing on Pfizer. This is a 1-2 Elliott wave nest. We're going to the meeting of this pitchfork. Pfizer has broken this all-time high, and it is going to the meeting of this pitchfork, and it will most likely be paying dividends along the way. So that's the power of investing. That's the power of wave theory. And a lot of people, they'll tell you, if you're not in a stock that's winning, that quarter, you have to dump it, okay? Sometimes the buy and hold is the best strategy, especially when a stock is a dividend aristocrat. Here's Procter & Gamble. Here's Walmart. Very quietly, as quiet as church mice, Procter & Gamble is about to break above this fourth quarter high. Walmart is about to break above this fourth quarter high from 2020. Why do we care? Who cares? It's Procter & Gamble. Toilet paper's boring. Okay, this is a wave one. That's an ABC correction wave two. So the length of wave one, place of the wave two low, gives a minimum target for Procter & Gamble of 174. Okay, it's about to break this wave one high of 144. That's going to confirm 7 or 8 months of institutional accumulation. And also, what's that mean? Well, if Procter & Gamble is confirmed to be within a wave three higher and the minimum target is 174, possibly by the end of the year, it's very unlikely the stock market will crash. You know, while Procter & Gamble is on its way to 174, Walmart is an almost identical chart. We look at Walmart right here. We're going to see we're about to break above this wave one high. It's identical to Procter & Gamble. 1, 2, 3, 4, 5, large degree wave one. You know, a high made in the fourth quarter. ABC correction puts in a wave too low. And then we have, 7 or 8 months of institutional accumulation. Okay, I know Procter & Gamble and Walmart are more defensive, but if we break above this wave one high and confirm that we're within a large degree wave three, that will take Walmart conservatively to 178, it's pretty unlikely that the stock market will crash while Procter & Gamble is heading to 174 and while Walmart is heading to 178. That's also kind of hinting at kind of the stay-at-home theme, right? Some of these big box retailers did pretty well. So that's another theme that I'm watching. Bitcoin and Litecoin. I mean, these are monsters right now. And, you know, I don't want to get carried away with my correlations, but if we're seeing evidence that crypto and crypto derivatives are going to do very well, it sort of supports the idea of a massive rotation into the growth stocks. Bitcoin, wave one, ABC correction, wave two. I do not think, you know, for the foreseeable future, we will see Bitcoin go below 28.9K. I think that's the wave too low. The length of wave one, place of the wave too low, will take Bitcoin to 89,000. We'll have a shallow wave four correction that will conservatively retest the wave one high, and then we'll go to 125,000. So I don't ever short Bitcoin. Okay, I wouldn't short Bitcoin ever. Ever. There was no reason I would ever short Bitcoin. I think this is going to six figures. I think it's going to six figures pretty conservatively. And I think that's going to happen in the first quarter of 2022. So if we look at Litecoin, I think it's a laggard right now. It could play catch up. It could be a nice opportunity for Litecoin, the full count. That's wave one. That's wave two. This is 2.5 years of accumulation, and we break this wave one high. So most likely, this large degree wave three will end at the median of this pitchfork. That's found by taking the length of wave one, connecting with the high of wave one and the low of wave two. Pitchforks don't work. Explosion. Okay, what do you mean pitchforks don't work? Okay, so that's another wave one. This is the wave two. It ended at the 78.6% retracement. Litecoin is a laggard right now. I think it's going to follow Ethereum. It's going to follow Bitcoin. Get closer and closer to breaking this wave one high. So Litecoin, the length of wave one, place of the wave too low. The next stop is all the way up there at 494, and that's just the conservative wave three target. I think Litecoin right now, it will hold above 104, and with Bitcoin, with Ethereum, it's going to break above these wave one highs and confirm a larger degree wave three in progress.